following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to John in Austin, Texas. Hey, John, what's going on?
Hey, buddy.
How you doing, man?
I'm so good I can't stand it. How about you?
Good, man.
God bless you. All of God's best to you and your family.
Wow.
You teach us how to make money. You are such a man of integrity and honesty.
Right.
I so admire what you do in your show, and you just deserve a whole lot of credit. And the other thing is you would be hard-pressed to invest in something that's going to bring you a better return than that gold report. It is fantastic, buddy. And I just so appreciate you helping us make money.
I appreciate it, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Those who don't believe in magic will never find it. Market-wise, let's take a look at it out here. We have the Dow Industrials up 199, NASDAQ up 73, S&P's up 16, gold contract down $6.40, trading at $1,133 an ounce. Silver up 5 cents at $14.67 an ounce. Platinum up 11 at $1,014 an ounce. Copper up 2.5 pennies at $2.32 a pound. Light sweet crude up 76 cents, trading at $46.18 a barrel. Bonds. We have the 10-year down 5 ticks, 127.05, 30 down 21, 153.31. King dollar's up 394 ticks, almost a half a penny at 84. The euro's down 0.76 at 112, and the yen is flat at 120.22. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have out here? This is a classic, folks. So we get a bounce. You're bouncing right now. We got 109 million. We went downtown yesterday with 256 million. You're going into 500 million rather, and 274 million. Bottom line, what I expect you're actually going to see out here, this is going to be kind of neat watching this close out here, and this is why. So if we take a look at, let me show you the E-minis just for a second. So if we deal with the E-minis for a second, what you're dealing with is this. You're going to bounce. It's on light volume. What is that setting up? That's setting up a run into the lows, and I'll show you some equities that are already doing that, which is pretty amazing. So on the E-minis, right now we're at 1931. I suspect when we're coming to this close here, we're going to be somewhere about 1923. Give up another about 8 points, maybe be up 8. With that setting up, that's going to set up a run down to these lows. You've been consolidating out here. Nice little consolidation. If you're trading, it's a beautiful consolidation. It's been from 17 up to 37, which is a beautiful thing. We take a look at the NQs, which is the NASDAQ. E-minis, same type of setup inside the NASDAQ. NASDAQ right now, you're at 4210. We take a look at that baby. That little baby right now, there she is. These futures, I suspect we're going to get down somewhere into about 41.88. And where I'm going with that, folks, just so you understand how I'm looking at this, when I'm doing a 10-minute chart here. That's what I trade off when I'm doing it. What you have is this, is that there was no juice topside. When we went topside, up here at the, let's see, about an hour ago. Yeah, at 1410 and 1420, you were coming into, you thrust higher at 0940 on the first. Bottom line, not even close. Now, on the way back down, what you have is that as we came back down at 10 o'clock this morning, there's some volume there when we came down. The top of that volume can hold that baby up. That setup, though, if we get down and the S&Ps are only up about 8, that sets up a real nice setup to get into lower price. We go take a look at the gold contract. What do we have with gold? Gold contract, folks, trading down $6.60. And gold out here today, we traded from a price point of 1131 to 1141. You've done volume of 105,000 contracts. You know, you basically coming into 151. Bottom line, gold is building cause. You know, we do want to see wide price spread, accelerated volume. I suspect we're building cause right now to get into that 1169 area. Silver, what are we looking at with silver? Let's go take a look at silver. Silver pulled its head up today. Didn't hold price. Bottom line is that what you have with silver is this. SI. Okay, silver contracts trading out at 1467. And anything inside the 1442 is a good number. We did 36,000 contracts. Silver's going to need a lot more than 36,000 contracts. It would have been nice to stay over the 74 mark. We hit 81. Bottom line, silver does need more price spread volume as it tries to get into higher price. Bonds. Now, this is where this gets tricky once again. Bond market. Let me pull this up here for a second. Okay, so the 10-year. 10-year doesn't look bad. 10-year with the 10-year did out here today. 10 years trading at 127.05. We've done 931,000 contracts. That was pushing into the higher range, and it had some juice behind it. Couldn't hold price. That's saying, okay, it's going to go back topside. 30-year, different ballgame. What we have with the 30-year is that the 30-year basically, did push into the lows. So the 30-year, the low of yesterday was 153.24. We hit 153.28. We hit it with 172,000 contracts versus 271 tomorrow. But what you do want to see is you want to see a rejection of that lower price. And it looks like the 30-year can actually get into lower price. King dollar. What do we have with King dollar? Let's go take a look at King dollar out here. What we have with King dollar is this. King dollar is up 399 ticks, 44,000 contracts. King dollar is having a tough time getting, number one, into the swing point. Now, the swing point we're talking about is not the last swing point, folks. Meaning that King dollar got croaked on the 24th. On the 24th, we went from 94.96 to 92.52. We did volume of 143,000 contracts. That's a monster, okay? You pull back up. It couldn't make it to its swing. The swing is 97.10. So that's saying to me, number one, King dollar is going to build a little bit more cause, try to get into the highs of the lows, which is 94, 96, and we'll see how it handles that level. Bottom line, King dollar, it looks to me like it's going into lower price. Our phone number is 877-927-6648. And, if you take a look at a couple of these high flyers, Netflix, okay, NFLX, this is where you can glean some information about where we are in the marketplace and what it wants to do. Netflix is down 240, not a big deal, but guess what? It can't get out of the bar from the 24th. I'll go through a few more of them. That's a big number, folks, meaning that we're going after the August 24th level. And I suspect we're going to go at those lows. We'll see whether it's an ABC structure on the way down. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow Industrials right now up $1.55. Nasdaq's up 62. S&Ps are up 12. And if we go over and we take a look at, let's go pull up GoPro here. So you have a few of these GPRO. What you're going to see with GoPro, folks, it's an ABC structure on the way down. Took out its B point, took it out with a vengeance. What you're also going to see is this, GPRO. As you're going to see, the trading day of the 24th, GoPro came down hard like all the rest of the equities. Had volume, on the move lower. You know, GoPro had gone down to a price point of $42. Yeah, $42.75. Then the next day on the bounce, it gets all the way up to 51. Gives it up again on the 26th, gets down to 43. And then what does it do yesterday? It breaks a B point of an ABC structure on the way down, breaks it with volume. Pretty heavy volume. So 15 million shares versus 12.3. That's saying GoPro is going after the 33 mark. Okay, big number. Now, let's go look at Big Blue. Big Blue is giving just about one of the best indications that, number one, it wants lower price. More important, however, is that we're not done on this downside going into the 24th and the 25th area. And this is what it is. If you take a look at, let me put this back. If we take a look at Big Blue, you're trading at 143.89. Well, the low of the 25th was 140.62. That little baby is building cause to get into that level. That's a heads up in itself that I expect what you're going to see is that the whole market is going to be basically making its way down there. What we are going to have out here today is that you're going to have a bounce. You're going to have a bounce on about half the amount of volume inside the ETF structures. If we first take a look at the SPY, what you're going to see with the SPY is this. The SPY, we're up $2 right now. You get 114 million, and we did 256 on the way down yesterday. You take a look at the Qs. What do you have inside the Qs? The Qs up with 34 million. We did $73 million. The IWM, it's across the markets. The thing that's also cool, folks, is that you have the IWM, it's up on $21 million versus the downtown out there, $45 million. And if we get into the diamonds and we take a look at the diamonds, what you're going to see in the diamonds are up on $6.7 million versus downtown on $14 million. Now, that's not even talking about what it's going into. That's just the correlation between down versus up. Now, what we are going to have is that you're going to have China close the next 2 nights. That's going to flatten markets out. We have the long weekend coming up, and I expect what you're going to see here is this. As we start coming into our close, this thing's going to basically pull back slightly. Nothing. It's not going to go in the red, but as I said, the S&Ps, I think they'll be up 8 instead of the 13.5. They started up 16 when I started the program. And what you're going to have is this. Yeah, so now try to get higher. They reject higher price. You have lighter volume. That's setting up an ABC structure on the way down. Tomorrow, you'll try to drift a little bit higher. Same type of setup. And we have holiday trading, folks. The markets are closed on Monday. This thing opens back up on Tuesday. This market, to me, wants to go lower, and I suspect what you're going to see, it's going to be lower a lot quicker than people even realize. Because the way that the market is trading right now is that there are no buyers. Intraday, if you're in front of a screen intraday trading, you can see every single bounce is getting sold. And if we look at I'll show you something inside the E-minis. And every day it's a little bit different. One day the operator's in the E-minis, the next day the operator's in the NQs. And that's where they're starting off. Let's put it that way. What you have out here today, as yesterday and today, both cases, it was the E-minis that were giving the best indications and the best information as to who is doing what. And you never know who it is, by the way. But what you have out here is this. When the last 10-minute bar, so right before I got on the air at 1440, you had come down, and you come down with 38,000 contracts. Then I tried to get high with 30,000. Well, right when I just got on the air, it came down with 41,000. That is building cause to get into the level that was out there at 10:30 this morning. Now, the thing that's intriguing here is that last bar with 41,000, you can still see that it's lighter than the 1916 area out here, and that's where I think this thing's going to hold. So some of the high volume stocks out here that we have in a low volume market today. You get Apple up $3. We had Netflix down 174. You got Facebook up $1.38. GoPro, as I said, that's down $3.20. You got American Airlines up $167. Now, the strength versus the weakness inside the bigger number, the Dow Industrials, this is what you have. The strength inside the Dow out here today is Apple. Apple is up 302. Microsoft is up 95 cents. Big Mac is up 195, and Home Depot is up 231. Taken away from it on the way down, Chevron down 33. Coke is down 12, Merck is down 7, and Visa is down 1. Inside the NDX 100, what do we have? The strength versus the weakness. This is how it's set up right now. Strength inside the NDX 100, American Airlines up 168, Viacom up 131, trading at 41.71. Regeneron up $16 at $5.12. Charter Communications. C.H. Robinson up 250, trading at 68.12. Taken away from it, Dollar Tree's a mess, man. What a trip that is. That's down 270 at 66.50. You have Seagate Technologies down 137 at 49.23. Netflix 123 down at 104, and JD.com down 42, trading out at a price point of 24.27. We go over and we take a look at the XAU. Inside the XAU out here, this is what you have. Now, this is where it's going to get wild watching this whole thing shake out. XAU right now is trading at 45.78, and what it looks like is that on a monthly basis, folks, the swing low of 49.59 is a high volume swing low. So I do want to see that get tested. I'd rather see it get tested in the next few days because the volume is going to lighten up. We have volume down there of 43 million. We came off that low with 58, so it's a decent number. When we were coming into it yesterday, we were only coming in with 36, and I expect it lightens up today. Now what you're going to be looking for is you're going to be looking for a rejection of lower price at the 43.59. HUI, same type of setup in the Gold Bugs Index. We take a look at the Gold Bugs Index. What you have, there she is. Gold Bugs Index right now is trading at $110.05, and that baby, the test is 104.69. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow's up 184. Nasdaq's up 73. S&Ps are up 16. Stay right there, folks. Come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up $187, Nasdaq's up 65, and you had the Fed's beige book come out this afternoon, folks. Okay, so the economy expanded across most regions and industries in July and August. The Federal Reserve report showed today as tightened labor markets boosted wages for some workers. 6 of the 12 Fed districts reported moderate growth, and 5 others said expansion was modest, according to the beige book released this afternoon. The report gives central bank officials who next meet on September 16th and 17th a picture of the growth that they, as they consider lifting interest rates in this environment, colored by, of course, the market volatility and the slowing growth in China. Boston, San Francisco, and Dallas districts specifically referenced the China slowdown as a source of weaker demand for some products, including chemicals, wood products, and high-tech goods. The word China or Chinese was mentioned 11 times. It was not mentioned in July's report. Most districts reported modest to modest growth in labor demand. Let's see. The Beige Book said, with a tightening in labor markets pushing up wages slightly in some industries, especially in the New York, Cleveland, St. Louis, and San Francisco districts. The Beige Book also showed that manufacturing activity is mostly positive, with only New York and Kansas Fed districts seeing declines. Looking at the Beige Book overall, from a Fed's perspective, this shouldn't change things one iota. David Adder, head of government bond strategy, said the labor markets continue to do a little bit better. Inflation continues to look a little bit weaker. The economy expanded 3.7% annualized rate in the second quarter. The report showed, and unemployment has been rising at a steady clip. Manufacturing in the U.S. expanded in August at the slowest pace since May of 2013, as lack of demand from emerging markets such as China translated into weaker factory orders. The unemployment rate has dipped to 5.3%, down from 10% peak in 2009. Bottom line is that when you look at the September 15th, 16th area, folks, I just don't see the Fed raising at that particular point. I suspect they're going to get right into December, because what you do have is that just the spike lower itself, no matter what happens in the marketplace, we're already at September 2nd. Bottom line is that if the market had basically stayed at highs, I think the game would have been on here. The Fed itself, folks, is so nervous about raising rates. It's just pretty amazing. And this is why, if you listen to the financial press this morning, what was going on is that there was a couple discussions about, they're saying, okay, the Fed hikes once and that's it. In recent history, each time, and I say recent history, going back last 35 years, each time that the Fed hikes, folks, they don't hike once. The hikes are fast and furious. Now, there's no doubt that the Fed has said, Fisher himself, I believe, has said that, no, we can hike once and then we can back off. No matter what the Fed says, the market itself, very well, and this is what they're going to be worried about, and it's perception, and it's the whole world's perception. The perception is that once that the Fed does hike, we are in a different market. Bottom line. Once you're in a different market, what ends up happening? What ends up happening, people start placing their bets on different deals. Those bets get placed in a market environment where rates are going up versus going down versus being flat. Because until the Fed does act, guess what? We're in a zero-rate environment. That's what it comes down to. The thing that's intriguing in my own thinking goes like this, is that when the Fed rate goes up, it's the Fed fund rate. We don't get that. No one gets that. No, think about this for a second. No one's at zero rates. No one's at 1%. No one's at 2%. The only people that unfortunately are at that, the banks basically taking everyone to the cleaners. Well, they're not taking them to cleaners because that's where the rates are, but getting no interest on their money. So it's like, okay, so you're going to go up a quarter, 25 basis points, which is 1/4 a point. You go up a half. That's fund to fund. How far is that really going to send the 10-year, yeah, I can send it up a half a point. Does a half a point mean something? No, because we've been trading in that range for a long period of time. That's what it comes down to. Yeah, exactly. As one of the targets saying, check your credit card rate. It's from 8 to 15%. Everything seems to be like from 8 to 15%. It's just amazing. And, it's like, okay, so what is intriguing is that they claim, well, the banks would make more money because the banks would make the spread between the 2 and 10. That's how well, actually, it wouldn't be they wouldn't even be the 2. Watch this. I'll show you this for a second. So if we bring this up, I'll show you the rates right now on a curve. Right now, the 10-year is at 2.1. Well, we take a look at the 2-year. The 2-year is at 0.7%. And the 30-year is at 2.9. What banks do on a continual basis, okay, is, the bottom line is that they're going to be borrowing on a longer term. They're going to be borrowing shorter term, investing in longer term, and that's where there's always a disconnect inside what they're doing most times. And if this fast market disconnects, that's where the banks can get in monster trouble. That's what it comes down to. Our phone number is 877-927-6648. Dow is up 206. Let's see what she's doing. And so 296 is the high. We're at 30 points off the high. We're at 202.34 right now. We take a look at the NDX 100, the Qs. The Qs are at 103.12, and that's only 12 cents off the high. The XLE, energy. What is energy doing? Oil was it was a trip out here today, folks. So the XLE traded down to 63.18 today. Had lighter volume and rejected that price. So it looks to me like the XLE can go after the 66.86. It'd be intriguing to see whether that's going to be a small ABC structure on the way up. If we take a look at ExxonMobil, XOM, setup's pretty good. You pull back today, you pull back with 12 million shares into 24 million. You're not over the highs. Now, this is where this gets intriguing, meaning that if you're what the energy market actually done, and that's what you'd want to see when you're a bull, is that had pulled back on lighter volume, rejected lower price. Now that's in the that's in Chevron also. In the broad market, it has done just the opposite. It's trying to push higher with lighter volume, and that's where the bullish deal doesn't work and the bearish deal comes into play, meaning that you're pushing higher with lighter volume versus going down and rejecting lower price. The financials. What do we have inside the financials? Financials are going sideways out here today. XLF is up 21 cents, trading at 22.87. Our phone number is 877-927-6648. Dow right now is up 220. Nasdaq's up 83. S&Ps are up 20. You stay right there, folks. We're coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is up 214. Nasdaq's up 83. S&Ps are up 19. Inside the commodity market out here, you had gasoline up 1.9%. Crude was up 1.2. We had sugar flat. Live cattle was flat. They had corn down 0.4%. Wheat was off 1.4. Natural gas was down 2.7. Volume-wise out here, what we're going to have is this, folks. Okay, we're going to run somewhere. It looks like we're going to be. Let's see, how many? We get 15 minutes left. Yeah. Well, this might be the first day that we're under $1 billion in NYSE since the 20th of August. It's going to be close. It's going to be a close call there. On the NASDAQ will still look like they're going to run about 1.85, and right now we're at 1.56. If we go over and we take a look at the NYA, folks, is the full market, the composite. What you're going to see inside this composite is this. The NYA, and what the NYA specifically is, by the way, is all the stocks and bond funds that trade, and the ADRs and the REITs that trade at the New York Stock Exchange. Okay, that composite index, had a high out there is 11,254. The low that was established got into the. Let's use the low of 9,689, even though the open quote was lower. What I'm doing on most of these, folks, is using the 25th, because the actual open on the 24th, they certainly went a lot lower, but that was like even 1/10, 1/16 of a second or something. Bottom line is that when you do take a look at this, what you're going to see is that the NYA is still deep into that bar. The top of that bar is 10,068. You're up $84 today. Right now, you're still $100 away from getting out of that bar. In order to basically get into higher price, you first off have to get out of that bar. When we take a look at it, the NYA also was the first indice to take apart the high volume October 2014 level that we suspected the market wanted to go to. Now, what you have is this. That high, we know what the monthly basis is now. Okay, so the monthly basis, that when we had been talking about the October 2014 level, the monthly basis on the NYA was 4.8 billion shares. The low there was 9,886. Well, we got down, we did 6.1 billion versus 4.8. So what does that mean? That means that low is going to be tested. That's the first part. Second part is actually a little bit more intense, and what it is that thus far, this hasn't been able to basically get above the 256, 10,256. Now, you can make a case. It would have to be slightly lower than where we are right now. But if we close under the 9886, you take the 9886, and then you take the high of 11.2, and that's your measurement as to saying that, okay, this thing is going to come down to the 9,400 level. So if we go overseas, we take a look at overseas. What we had last night overseas is this. We go to Shanghai first. Shanghai was a flat market last night. Now, Shanghai is going to be closed for 2 days. We're at 316. Actually, we're going to be closed. Shanghai will open next Sunday night, but we won't be open Monday, so it'll be Tuesday when the action's happening out here. But Shanghai couldn't get out of its way. The Hang Seng. We take a look at the Hang Seng. What you have with the Hang Seng? Hang Seng actually broke its lows of the 25th. It managed to hang on to them. The low of the Hang Seng is 20,865. We went to 20,771. We closed at 20,934. So yeah, it's hanging on by the skin of its teeth. We take this and we put this on a monthly, and what you're going to see on a monthly is this: is that we came down with some juice. It looks to me like 272, 20,272 wants to be tested. You know, we've hit the 20,771. Where I'm going with that, folks, is that that's the swing low from, and that's the high of the swing low, not the low of the swing low, from October of 2011. That's the way that seems to be setting up at this particular point. We go back over to the Qs. We take a look at the Qs because this closing in on the market out here is going to be important, and this is why. The Qs right now are at 103.26. 103.26, anything over 103.18 does get them into the gap. You know, the Qs haven't been able to get into the gap down from the 23rd, I mean from from August 31st to September 1st. If we go over to the SPYs, we take a look at the SPYs. I believe they're set up the same way. They are. The SPY, you know, on the 31st, you're at 197.54. Following day, you're down at 194.77. So both of those are laying out the exact same way. We go take a look at the IWM. See, there's so much that this market is giving away. It's a trip. Information, that is. The IWM, folks, hasn't even got close to the gap, where the SPY and the QQQ are right at the gap. The IWM, let's see what she's doing. IWM's not near it either. No, I just said the IWM. Let's look. We know the IWM's not near it. The SPY is right at it. The Qs are right at it. And the diamonds are above it. The diamonds are actually right at it. It's 62. 162.62. That's the number. We're 162.75. So this is pretty wild watching how this whole thing is shaken out. What we did do is that we got a plus tick of 1123 inside the market. That is saying that there's still zero fear, and folks are worrying about once again that this market is a buy versus getting your stops in versus basically just selling it. Some of the Dow stocks, this is where we stand with the Dow stocks right now. You get American Express up 63, Boeing up 273. Let's go to Boeing because Boeing has been taking a hammering. Yeah, it's a dead cat bounce. Okay, so check it out. Boeing's up 277. Now, Boeing is also deep into this bar from the 24th. This is pretty intense, actually. The top of the bar is 135. Bottom is we're dealing with 125. You're at 130.23 right now. We came down on 9.4 million. Yesterday, you come down on 5.7, and today you're going up on 3.5. JP Morgan Chase. JP Morgan, let's go take a look at that. JP Morgan up 73. The top of the bar is 62.92. You're at 62.29. You come down yesterday on 23. You're back up on 13. 877-927-6648. Dow Industrials are up 223. You get the NASDAQ up 90. S&Ps are up 21. You stay right there, folks. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow Industrials are up 244. You get the NASDAQ up 98. S&Ps are up 24. And, yeah, they're surging it into the close, no doubt. So let's go take a look at those E-minis right now. And what we have is that you're up $24. You're at 1940. And, yes, you... Okay, so... There she is. High that was generated out here, 1939.50. This is going to be interesting. Okay, so the 1939.50, folks, represents, we bring this back. Let me show you what this is doing right here. Okay, so the 1939.50, 9:40 a.m., that was the number that would, on the first. That's what that number, that was the counter trend bounce that got up there. Versus how we end up going downtown that day. We got to that 1939.50. We end up going downtown to I think it was 1890 or something. Yeah, 1898. You know, so we're coming into it. Bottom line, you know, you're not coming into it with any juice, but we know how this goes, that you can get up and over it. But that number is going to be a big number to watch, because if you can launch if you can launch the 1943 area, and the 1943 was from 3 o'clock in the morning, then the market does have a shot to get into the 1967, which would be a trip. There's no doubt. 2 days left coming into 1967. We'll see whether we get vol coming into that or not. But bottom line is that 5 minutes left. They're giving it a shot to get up into it. And when you take a look at it, that level, the 39.50 level, is an important level. There's no two ways about that. We go take a look at overseas. We take a look at the FTSE. What the FTSE did out here today, that was a flat market. That was up 24 bucks. Inside day, no big deal. DAX, same type of setup. That was up 32 at 10048. And the surge still is not going to give the market any juice coming into it. What's going to be intriguing here is to see is the NYSE going to be not just under a billion, but is it going to be under a billion by a bit? I suspect at this particular point, we'll see. The bottom line, we're running at 718. Now, 718 is really light, but the amount of volume that does come in at the close is pretty intense. We go take a look at the oil market. What we had out here with oil today is this. Oil rejected lower price. This is, you talk about volatility. Man, oh man, this oil market has been just unbelievable. CLV5. So oil out here today traded to a low of 43.21. It's at 46.04. And, bottom line is that it had 662,000 contracts. That was going into 750. It rejected that lower price. In this case, it had lighter volume. So you still get game out here going into the highs, number one, but you very well could have an ABC structure up. And if it's an ABC up, it's going to be a monster. It's a 12-buck ABC up, which you get you into the 51 area. It kind of makes sense, though, because what it looks like is that the counter trend bounce on oil, looks like it can definitely go up to this July 6th and July 7th area. That's kind of how this baby is set up right now. And that, of course, we've come down so dramatically off of that level. But you're coming off the lows, and you're coming off the lows with some juice behind that move. And that does make a difference. There's no two ways about it. Inside the NDX, let's see what's still running the NDX right now. The strength inside that NDX is what? American Regeneron, REGN. Let me go look at this. Yeah, Regeneron loves to go up or down 20 bucks each and every day. This is Tom O'Brien. This is TFNN. You stay right there. We'll come right back. Dow up 258. NASDAQ up 101. S&P's up 26. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
How you doing today, Tom?
I'm doing great, man. You having a good day out there?
I am, thank you. I was really just commenting on the fact that I'm really enjoying the new format with you being there when the market's still open. We've assembled a great group of people. They're all great technicians. I'm just so glad that I first talked to you on the radio with your little tiger growl. I'm like, who is this guy? And it got my attention, and it's really made a positive change in my life.
You're awesome, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Live in faith that the whole world is on your side so long as you are true to the best that is in you. That's a quote by Christian Larson. Market-wise, let's take a look at it out here. We had the Dow Industrials finish up 293. That was really rocking at the end. Went from 2 to 300. NASDAQ up 113, S&P's up 31, gold contract down $6.70, traded at $1,133 an ounce. Silver up 4 cents at $14.66 an ounce. Platinum up 12 at $1,015 an ounce. Copper up at 2.5 pennies, trading at $2.32 a pound. Light sweet crude up 66 cents at $46.08 a barrel. Bonds, we had the 10-year down 4 ticks, 127.04. 30-year down 17, 154.03. King dollar up to 474 ticks, trading at 95.92. The euro down 89 ticks at 112, and the yen flat at 120.27. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? We take a look at the SPYs first. This is what you have. Well, percentage-wise, this is what we have first. You have the Dow up 1.8%. You have the NASDAQ up 2.4%. S&Ps are up 1.5%. We start with the SPYs. What do you have? We go up $3.54. You do 150 million shares. Bottom line, downtown yesterday with 256. You're going into 274. But that's a dead cat bounce, folks. SPYs can get into about 197.01. We'll see what can handle it. We have holiday trading today, tomorrow, and Friday. Each day, you're going to see the volume contract. Inside the NYSE out here today, what we did 1 billion shares versus the 1.1 in the NYSE. We take a look at the NASDAQ, what we did with the NASDAQ. NASDAQ did 1.9 versus 2.2. Inside the Qs trading at 103.90. What we had with the Qs is this. Qs did 41 million shares. You go downtown yesterday with 73 million. You're going into 69 million. Same type of setup. You're bouncing on lighter volume. The low, when we gap down, we had gap down yesterday at the open. That gap, is 104.05. We hit 103.92. The gap inside the SPY, a little bit higher, I believe. Let's go take a look at that SPY for a second. The SPY inside, the SPY was the weakest when we had, the SPY's 197.01. Small caps, what do we have inside the small caps? The small caps were lagging out here today. The IWM, if we take a look at the IWM, that went up on 26 million shares versus downtown with the 45 million. The top of that gap is 114.76. You're at 113.92. Gold contract. What do we have with gold? Bottom line with gold. Gold needs some wide price spread, accelerated volume. Gold traded out here today from 131 to 141. Did 106,000 contracts. We need some wide price spread, accelerated volume. Gold is in the higher range, but bottom line, it needs some traction. What did happen out here is that silver was performing pretty good out here today. And that, when you take a look at both of them, that's more crucial at this time. The reason being is that silver has been such a laggard inside the metals market. Monster laggard, too, by the way. If we take a look at it, what silver did do today, it picked its head up slightly. It got to 1481. You closed out at 1461, and over 1442 is a good number. Bottom line, the longer it stays over that number, the more probability is that you will get a wide price spread, accelerated volume on that level. Now, let's go over and we take a look at the bond market, because the bond market has been the most consistent giving information out in this marketplace for a long period of time. We take a look at the 10-year first. Now, 10-year did 991,000 contracts. That's decent. It didn't hold price. We got to 127.17. You're at 127.05. Bottom line, you're still pushing with price and with volume. We're going to need to have that baby stay up there if, in fact, it's going to go test the highs of 129.10. Now, the 30-year, this is where this is going to get really dicey. The 30-year, folks, really did not surge higher and is actually pressing into its lows. The 30-year was down 18 ticks. we had lighter volume. You know, the low that we're pressing into, the low of yesterday was 153.24. You had 271 million contracts. Today we did 182. Bottom line, that if that baby doesn't hold, you're going to be down to the 152 pretty quick. Now, looking at the bond market, this is where this thing gets really dicey. Is that if you break this and we break it with volume, then you get a small ABC down. You know, so that the reason I'd say it would be dicey, because if bonds are going down, that would mean that we'll get more traction on the way up. Thus far, inside the marketplace, this is a bounce. That bounce is on lighter volume. King dollar. What do we have with King dollar? What you have with King dollar is this. King dollar is having a tough time with the swing point. The swing point we're talking about, too, is from the 97.10 area. That's the 18th. Last time we got up to the 96.25 area, couldn't handle it. What you have out here today, you're pushing into it. You know, we'll see if, in fact, it can make the swing point that we're talking about here is the 97.10. Last time up here, it died on the vine when it was getting to the 96.35 area. Some of the high volume stocks in a low volume market out here today. You had Bank of America up 27. Apple was up 462. Well, let's go look at Apple, because Apple situation. Apple yesterday, you're down on 76 million. You're up on 61 million. Guess what? That's an equity that wants to go lower also. The IBB. The IBB is what the NASDAQ Composite's all about, no doubt. IBB is up $12.89. Had volume of 1.6 million after coming downtown with 2.2 million. Going into the close here, it was all about the IBB. And what that's about, by the way, folks, is this. So watch how this works. The IBB surged from 343 to 346.23. Now, I want to show you something. If you're watching Target TV, I'll show you the trade. The trades came in, and they came in fast and furious of 296,000, 20,000, and 8,600. That is over 300,000, which is over 20% of the trade. You know what that is, folks? That is the straightening out of the net asset value of the IBB. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish up 293, Nasdaq up $113, S&P's up 31. And as we do each and every Wednesday at 20 past the second hour, we have our man, Mr. John Logan. John kicks us off every trading day right here at TFNN, folks. He has a great program, 8 to 9 o'clock Eastern Standard Time every morning. You can get it right on your cell phone, tfnn.mobi. Now, as he kicks us off, he brings us around the world, tell us what's happening, and he's using the TAS Profile Scanner Plus. This is a phenomenal piece of software, folks. You can test drive it right now, absolutely free. No credit card, 14 days, free. Come over to our website at TFNN. You're going to see it right in the front page in the carousel. Second one down, hit it. You'll see the TAS Profile Scanner Plus. Test drive it 14 days. Now, as you test drive it, John has put together a lot of great videos right there. He'll walk you through it. Of course, listen to him every morning, 8 o'clock in the morning. And it doesn't matter where you are, folks. Right on your cell phone, tfnn.mobi. John Logan, what's going on?
Hey, man, good to be back with you here on a Wednesday afternoon. How are you doing?
That's a beautiful thing. I'm doing great. I'm doing great, man. Kicking into a holiday weekend. They're running the market. You know, what day is it? Just tell me whether it's up or down. I'll tell you what day it is.
Yeah, we need a little bit of vacation from the volatility here. Whew.
Yeah, I like it, actually.
I know you do.
It'll be sad when it goes away. You know, I remember the last time, you know, we had it for about a year, folks, and when it went away in 2008, it's like, oh, man, this is too bad. But
yeah, I know. But for the 99.9999% of the people.
No, I understand. I understand. Yeah. No.
Let's take a look at the DAX really quick. I got it shown in the end. You know, a lot of people don't really grasp sometimes how everything's so globally connected now.
Yes.
And you know, the Shanghai thing's a great example. What's going on? I mean, they catch a cold. You know, this thing just implodes below our 2060 big-time support area in the S&Ps. And now we're kind of gathering, even though we've got an update today on the S&Ps. In my opinion, we talked about some ranges this morning. We're just staying in the range that is clarified as the so-called balanced area. And you know, this DAX really, to me, I mean, I think we've got another good indicator here on this that we're staying below our latest balanced area lid on this about 1035. So for guys out there and gals out there who are looking to kind of figure out maybe some leading indicators, if you will, on what's going on with their portfolio and what to pay attention to. You know, this thing breaks above, let's just call it 10,400. That's a good sign for longs, but right now we are seemingly just gathering some steam here below our balanced area on this particular foreign market to possibly head lower. But again,
John, that's great. This is, folks, you got to wrap your head around this. This is huge information because what happens, of course, is that the DAX is open before we are. Yeah, man, I see that. That's so cool, man. Okay, I like it. It.
Yeah, and another thing, you know, I've been looking at the financials pretty hardcore.
Yes.
I know you have been too.
No, I heard you this morning saying how they. Yeah, go ahead.
Yeah, I mean, it's you know, guys who have been doing this for a while, and for everybody out there listening to this show who just is looking for some meaty information, some of the just like all the stuff that you give them doses of every day is just invaluable.
Sure.
The financials, again, you know, if you look at our profiles and we're looking at this, and this is all in our scanner that we have out there, you really don't need charts, I mean, to do some of the functions that I perform every day. But 2261 on this financial is obviously, you can see it right there.
Yes.
Ahead of time points out where the possible bottom is on this and where we got to take our shorts off
Take
a little
your
bit
stand,
there.
yep.
Yeah, but this is Custer's last stance for these financials again, and 22.61 on the XLF combined with, and obviously this is the long-term breakdown on this 24.57. To me, there's a couple things going on here. One of them is, these financials would not be caving in. I mean, the market has obviously helped these things come down, but they would not be caving in if they weren't seriously concerned that yield curve is not going to continue or not going to widen anytime soon.
Right.
So that means, obviously, that
no interest rate hike. Yep.
And then there's a couple other things that go along with that. Why is that happening? Why are they not raising rates? And the financials are going to get, in my opinion, a lot sicker. I was a little bit early on this trade. I was thinking we were going to implode on this particular sector a lot sooner than this.
Okay.
But again, the profiles kept me from really getting short in any big way until that 24.57 was breached. Now, a couple of the internals, Tom, I know you follow these, the JP Morgans of the world.
Yes.
The Citigroups, the blah, blah, blah. I mean, look at these.
This is so cool, folks, because you can take the XLF and then right inside the scanner, you can break it down with the weighting structure. Go ahead.
Yeah, let me show you. I'll go into the ETFs here on the scanner. As you can see, there's not a sector on the long-term stance that's showing any kind of net breadth positive situations here. I'm going to switch to our daily. There's one sector, the XLE.
Okay.
Go figure. Oil just rallied 20%.
Yeah.
A lot of this stocks just got off the floor. Here's the 4-hour and obviously the 1 hour today on the sectors. We obviously the market's up significantly today, but the long-term view on a lot of these sectors is just damningly short. All right. So let's go into the XLF. Let's drill down into this. And there's a lot of parts of this scanner that are extremely useful. One of them is being able to rank different sectors in a way you've never been able to do that before.
Yes.
Amazingly, good clarification on what's going on relative to where balanced areas are and imbalanced areas are. But I'm drilling down to the XLF. And, it's obviously a sea of red still. We had a couple of green shoots on some stocks today. Public Storage, Regions Financial Corp, to name a few, Travelers Companies. But if you look across the board here, and I'm going to go to JP Morgan. Where's it at? Blah, blah, blah. Where is JP Morgan? Okay, here we go. Below the profiles on both, been in a downtrend for 3 weeks already. And on the intermediate, 10 straight days below our profile. So what does that mean? Go to our chart. And what this cool feature is in the scanner, it's going to pick out when these stocks are approaching these high probability areas. And the good news is, we always talk about this on the show every morning. I know you're probably tired of hearing this, but the first thing you think of in an active trading environment is you got to first take the, I'm going to play defense first stance.
That's right. No, you got to know where you stand, right? Period.
The upside will take care of itself if you play defense. So the play defense situation on this one is stops above 64.70. Still love that trade in that particular frame of mind on JP Morgan. And considering what the financials are doing, you've got a shot here that you can take again.
Look at that. We're at 62.57, folks. Yeah, cool, man. Yeah.
And the Maginot line for JP Morgan's definitely above 65.27. That's where you pretty much got to say uncle on that particular situation. But I think these financials have a chance to drift lower. And I know people out there are going, well, thanks for telling me this week, but why didn't you tell me 2 weeks ago? But, it really was already writing on the wall when we started breaking down below those profiles, and the scanner started showing red on the XLF, the breadth calculation in the ETF, and in the internals themselves. And there's a lot to look at here. You can do some really cool sorts. You can find out really quick what is positive on Progressive Corp. That's it. I did a little sort there showing, what's hanging out above profiles still in the financials. This is the one not to short, by the way. So it keeps you balanced, so to speak. And I got some other things if you want to talk about it.
You know what's going on? I got, Mr. Sal Gilberti coming out next, the president of TFNN Funds, John. But I can't wait to hear you tomorrow morning, brother.
Sounds good, man.
Okay, man. Have a great one. Have a safe one. That's our man, Mr. John Logan, folks. You stay tuned. I got Sal Gilberti coming up, the president of TFNN Funds. And, of course, TFNN Funds In the ETF structures, they trade corn, soybeans, sugar, and wheat. We're going to be right back with our man
It's
Sal.
hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We had the Dow Industrials finish up 293, NASDAQ up 113, S&P's up 30, and we go over into the futures markets, folks. You know, what's been in the news, like in a huge way, is El Nino, okay? When we start talking El Nino and you start talking futures, you can start talking what? You can start talking agriculture. We have our man, Mr. Sal Gilberti. Sal is the president of Ticrium Funds. We want to welcome Sal to TFNN. Now, Ticrium, folks, has 4 separate ETFs that trade the futures markets. Well, that trade in the ETF market and the NYSE. You'd like to trade wheat? W-E-A-T. You're trading corn? C-O-R-N. You're trading beans, soybeans, S-O-Y-B, and sugar is C-A-N-E. Sal, welcome back to TFNN.
Great to be here, Tom.
Hey, you know, it's so funny, man, is that, I started off with El Nino, and we have a lot of people that absolutely love trading wheat, beans, wheat and beans mostly. Some of them trade sugar. But so I had a guy on this morning, right? And he's absolutely convinced, and I love this guy. This is Dave from Clearwater, okay? And, he's convinced that, hey, man, wheat's the number. And actually, the guys from TD Ameritrade, one of the guys that does the show, he's a big wheat trader. He loves the grains right now. And then this was yesterday morning, rather. Then today, I'm waking up. No, it was this morning. And then today, across on Bloomberg, another guy comes out and says, because of El Nino, now it should be hotter versus colder, so my point is that I guess whether you're a bull or a bear, inside your funds, you can trade them both ways, right?
That's very true. The ETFs are liquid. You can buy and sell, and actually soybeans, corn, and wheat. All three of those ETFs have options that trade on them. So people can go long or short to their heart's content in any manner they like.
Sure. Now, if we can start, let me ask this. When we start with corn, I knew corn was huge, but I guess corn is the largest agricultural product that we have, right?
It is. It's the largest by production in the United States by far. It consumes the most acres. You have billions and billions of bushels produced. The United States alone will produce, in any given year, give or take 13 or 14 billion bushels. So there's enormous production that comes from corn. The number 2 crop is actually hay. But you can't trade hay. It's for animal feed. Corn's number 1 use globally is animal feed, and hay is used to feed animals. The feeding of animals is truly the most unheralded, unknown aspect of most all of agriculture.
Yeah, that makes sense too. That totally makes sense. I was talking to a guy about hay last week, that he has a lot of hay, and I was wondering. Like when they put it, you see it in the fields, folks, and it's rolled up. And I was always wondering when it gets rained on if that means a thing. He said it doesn't mean a thing because I guess it will only penetrate like a quarter of an inch or something, right? So they can roll it up and then they bring it in. Now, the last time that you were on, you were giving us a great education about the ETF structures and in the aspect of where you should be trading them. And what I'm talking about here, folks, is this. This is really crucial to understand. Inside the corn structure, right, as you're coming in and out of them, right, can you talk a little bit about, number one, I know that the future is backing it up, but you can go in and out of these as long as the pit is opened, right? So can you talk about how that works?
Well, you can trade, the corn fund, CORN, on the New York Stock Exchange the whole time the New York Stock Exchange is open.
Yes.
And so the thing is, you get your best liquidity with any ETF when the underlying that ETF is based upon is also trading. So
Thank you. That's what I was trying to get to, right?
Yeah, that would be until corn futures close, and call it 2:30 Eastern, 1:30 Central.
Okay, great.
When those futures close. And so if you trade, basically your best time to trade these things is between 10:30 and 2:30. There's a 4-hour period. Everybody's paying attention. Futures pits are past their open. Everything is going gangbusters. Everybody's happy. They've gotten past their first hour on the stock market, because remember, machines make the markets in ETFs. And so a guy who's making a market in an ETF is really making it via a machine, and he's not just watching the ETF you happen to want to trade. He's watching probably many dozens or even hundreds of ETFs at the same time.
Yeah, no, it was a great point, because we know how many people trade ETFs, and at the August 24th open, not your ETFs because they opened later, of course, but on August 24th, what had happened with the Qs, like the Qs claimed that they traded 84. Well, I know they didn't trade at 84. I was right in front of them. But they had a problem, okay, because of that fact, because the NASDAQ futures were down limit that morning, So it's great to understand when we're trading, wheat, corn, beans, or cane, what is going on there. Now, talk to me a bit about how the crop reports come out. Now, they come out. Do they come out every month, the crop reports?
Pretty much every month.
Okay.
They come out generally the 10th, 11th, or 12th of the month. I believe the next one is September 11th.
Yes.
And they come out, and those are the United States government's best guess on crop progress. And so different times of the year focus on different things. The most important few are going to start coming out this next report, September 11th. And then the December report is really, really crucial, because that pretty much marks the end of Northern Hemisphere's harvest. So there's a pretty good idea of what's going on. And then the first few reports in the year, January, February, that's a look back where the government kind of finalizes its numbers. Those become official. And that's really important, because those are the goalposts, if you will. Those are the metrics that everyone sets their look backs on. And of course, because everything's a projection, given when you put a seed in the ground, you don't know if it'll grow or not. You really need a baseline from which to start. So when those numbers are finalized in the beginning of the calendar year, looking back at the crop year, those are very important. Then you get really important reports come springtime, because you want to know the planting progress. Are farmers getting into the fields in time?
Right.
Then it kind of goes kind of quiet during the summer, although the last report in August, as we saw, I think I was on that day, we had some big action in the futures pits, some limit moves, and that, of course, the ETFs kept trading. They don't care if it's a limit move or not in the pits. But importantly, these things set the metric by which projections are made, and the projections are really important.
Yeah, what's really cool is really getting. It's amazing to me that, and I'm including myself in this. Through the years, I started trading futures maybe about 20 years ago, but the reality is that for so long, not really understanding them, and this is stuff we eat every day. It would seem like it's the most normal stuff. Do you know what I'm saying? So it's like,
that's a really important point, because most people invest in what they know, and there are many investment professionals that have always recommended that. And the simple truth is most people don't know how much they actually know about grains. They are not conscious of how grains are touching them. I think on last time I was on, we pointed out how pervasive corn is in the economy.
Yes.
It's really important. And of course, soybeans are also in the fuel supply through biodiesel.
Sure.
Ethanol plants can actually take wheat as a feedstock. So when there's poor quality wheat, it goes into an ethanol plant. So wheat is probably the least tied to the fuel supply, but it is tied to the fuel supply. And of course, sugar in Brazil is the #1 producer of ethanol besides the United States, and they use sugar.
Can you just hang with us for a second? We got a quick break.
Yes, sir.
Awesome, man. We appreciate it. You stay right there, folks. Sal's going to be coming right back. Now, folks, the website is TECRIUMFund.com. It's TEUCRIUM fund.com. Sal and I are coming right back, folks. You stay right there.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We had the Dow finish up 293. NASDAQ was up 113. S&Ps are up 32. Guest today is Sal Gilberti. Sal is the president of Tecrium Funds. And, folks, the website is tecrium.com. I happen to be at the Sugar Fund, and so I basically gave you that wrong website. It's TEUCRIUM.com. So, Sal, when we're looking, you know what always intrigued me is that coming into the winter, right? When we're talking about, basically something we eat every day, and, whether you're eating Wheaties in the morning, right? The wheat crop, I guess, the winter wheat crop, it's amazing to me that I guess they plant it and then you hope that it snows and it stays covered, right?
That's right. You plant the winter wheat crop in the autumn, and then it comes up a few inches, and then you hope it gets good snow cover to protect it from bitter cold.
Okay.
Because snow acts as an insulator. And so if you make it through the winter, and that's a big deal, you have a crop to harvest come basically June-ish. Up here in the northern hemisphere,
yeah,
and then you can the guys who plant normal wheat, so just called spring wheat,
yeah,
that wheat you plant in the spring, just like you're same time you're planting all your other crops.
I see. Okay.
And so wheat is unique. It's different from corn and soybeans in that wheat actually has two harvests. It has a harvest in the spring, early summer,
yeah,
and then it has a harvest in the late summer and autumn, whereas soybeans and corn have a harvest in late summer and autumn. And there's an interesting thing that we're in the process of putting out, so I can't speak too much about it, but
okay,
there's a very strong seasonal in the corn markets because two countries, China and the United States, are the top two producers of corn in the world, and we harvest our corn at the same time. We're both in the northern hemisphere. So essentially with any crop, when you harvest that crop, you're harvesting all of it at the end of the season,
yeah,
and then there is no more growing. I mean, okay, there's more growing in the southern hemisphere, but with any crop, once you harvest it, until you plant another seed and it grows, all you have to live off of are your stockpiles. And when all your stockpiles come to market in, say, a 3-month period for the year, that can provide an opportunity for investors sometimes to layer in. Statistically, that pairs out, but we can go over that at another time.
You know what's so cool about commodities is that I remember, whether it's 3 or 4 years ago, is that, corn was through the roof. And, I mean, the farmers, it was almost like they were planting corn on the sides of the roads, under expressways and everything, right? And it's so intriguing, which I can totally understand. But then as soon as there's too much of it, right, then the price goes all the way down until there's not enough of it. And then, like, the whole cycle starts again, right?
That's right. And that is what provides investors with really good opportunity because farmers can respond quickly. So if you have a gold mine or an oil well and the prices go up, so you need to respond by putting more supply in the market, digging that mine might take decades in opening a mine.
That's right.
Digging a well could take months or years.
Yeah.
But farmers, in 1 year, they're back. In one growing season, they're back. So prices go pretty high. They're back. I mean, you started the show with a mention of El Nino. The last time El Nino affected things really badly in our markets, the four that we concentrate on, was when wheat. And that happens to be when wheat made its all-time high. And the reason is that an El Nino can often cause heat and dryness in Australia. And Australia is either, depending on the year and how they're doing, whether there's an El Nino or not, they're either a top 10 producer or a top 5 producer of wheat globally. And they were basically had back-to-back droughts. And the second year of the El Nino driven drought in Australia caused wheat prices to hit their all-time high ever. Wheat did not make the highs that we saw in the bubble that say all the other commodities did at that time. It had made them before due to a drought. So what happens is, back to your cycle theory, farmers can respond. They respond quickly like they've done now. There's plenty of corn. There are plenty of soybeans. We're approaching the cost of production of corn. When you look at the cost of production of corn, most people say non-land costs is somewhere in the low threes, low $3 a bushel. But when you put all the costs in, most people's estimate is between essentially, call it $3 and $4, and that actually happens to be the low in 2009 on continuation charts for corn. We actually stopped between $3 and $4. Well, there's a reason for that. That's cost of production. So you're not going to trade an agricultural product, especially one with the demand that corn has. And corn and soybeans are experiencing record absolute demand, meaning each year the world is consuming a greater number of bushels. Now, we have plenty of stocks this year, which is why prices are approaching the cost of production or in the cost of production range for both of those commodities. But what happens is it's not a matter of if, it's a matter of when. We live on planet Earth. We're at the mercy of the weather. We're at the mercy of the biblical things of floods, fire, famine, and farmers live those things every day. So when grains or any agricultural commodities cycle down, like the grains have done now, like corn, soybeans, and wheat have done, and sugar as well, that is an opportune time. It can be an opportune time for investors to layer that into your portfolio. When you look back, depending on the commodity, corn, soybeans, or wheat, you generally have a supply disruption. And remember, demand is really constant. So these are supply-driven markets with prices.
Yes.
What happens is if you have an interruption of supply with demand growing, suddenly prices tend to spike to react to that. Now, farmers may react, but you've got a commodity that can go up very significantly, and it tends to happen every 3 to 5 years in the big ags of corn, soybeans, and wheat. So, we keep our eye pretty closely on them. We're entering the third year of bumper harvests. So, last time corn spiked, it went from the $3, $4 range all the way up to the $8 range. Now, nobody can predict what it's going to do, but when you have 75 million new people on Earth every year that need to be fed, and their animals need to be fed.
Hey, what's really interesting about that? Being a baby boomer, and I'm at the beginning of the baby boomers. I'm like 5 years into it. I remember just saying to people, all you have to do is be ahead of everyone else because of what you just said. It's kind of neat that when there's more demand than there is supply, you actually can almost make mistakes in life. And like, hey, there's so many more people coming up. It's like, okay, man, they smooth some of these things out. Now, what's really cool, of course, inside the ETF structures, a lot of people get worried about futures, but in the ETF structures, they trade just like a stock versus, basically putting up shorter margin and, you can basically, go up or down a lot in the futures market. In the equity market, folks are used to it, no doubt, right?
That's correct. And, the fact that we put these things on the New York Stock Exchange, the fact that they are unleveraged ETFs, they're fully collateralized, whether or not you buy them on margin, that's your decision.
Sure.
But our funds in general are designed to go up when the price of corn, wheat, soybean, sugar go up, and down when they go down. So you can obtain these things, put them in your portfolio when there are these cyclical lows, and anticipate when there may be a supply disruption, which, as we say, if you look back in history, it's not a matter of if, it's generally a matter of when.
And it's a great diversification, right? I mean,
that's correct.
That is absolutely crucial also. Listen, folks, you can go over to the website. It's teucrium.com. It's TEUCRIUM. We're going to have a banner right on our site, folks. We're talking wheat, corn, soybeans, or sugar. Sal, thank you so much. You have a great one, a safe one. We look forward to having you back on again.
Thanks, Tom. Appreciate it.
Okay, take care. Bye-bye. You stay right there, folks. We're going to be coming right back. The symbols are WEAT, CORNSOYB, and CANE. We're going to be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go to Jim in Boston. Hey, Jim, what's going on?
How are you, Tom?
I'm doing great. You having a good day out there?
Yeah, so far so good. It's very hot here.
Oh, is it?
Yeah.
Wow.
Yeah. Hot and humid again.
That's I guess this would be the end of it, though, right? I mean, when it gets humid in Boston, it's vicious, man. Oof.
Yeah, and the poor kids are going back to school, so it's a tough time for them.
Yeah, no doubt, man. No doubt.
Hey, my question is about AT&T. Last week, you had a caller who called in who was asking you about like an entry point, and he was looking at the dividend yield on it.
Yes.
And you were saying, something like high 20s, low 30s, and the dividend yield is, looks pretty good. It's
5.73. Yes.
Yeah. So let me ask you the question. I looked at AT&T, and the thing I don't understand about it, it's more of a fundamental question.
Okay.
The PE is really high on AT&T, right?
12.57.
Because when I look at the PE, I see that it's like in the 30s.
Yeah, I'll show you if you're watching Tiger TV. I have, it doesn't mean this is right. Okay, this is what Bloomberg has right now. It has the PE as of December 15th is 12.57. Right there. So.
Okay, because I look it up. I look at it on Yahoo, and it has it as much higher, which seemed really weird to me. It had such a high PE and such a high dividend. I'm saying to myself that those two things don't make sense.
Yeah, that would be a disconnect in a huge way.
Yeah,
because I just pulled up Verizon. I suspect it's right because of Verizon. I just pulled up Verizon. It's 11.55. You know.
Okay, and then that makes more sense to me.
Yeah.
All right. That's why I called. Thank you.
Okay, man. Have a great one. Have a safe one. And that is a large PE, folks. There's no doubt. Good old Ma Bell. The bottom line, you talk about taking in money too, man. These phone companies have definitely figured out how to finally make money. So Ma Bell per quarter is taking in $41 billion. You know, it's a big number. They took in $31 billion in 2011, 2012. Start pumping up. From this year to next year, they're expecting. Actually, hold it. This is going to be intriguing, actually, to see how this shakes out, because the second quarter they only took in $33 billion. They're saying in Q3 they're going to take in 41. Oh, that's because they bought. Didn't they buy Verizon? No, they bought someone. So that extra, $8 billion is going to be from who they just bought. I forget who they just bought, but they just bought someone. That's where that's going to come from. I think, did they buy out? I think they might have bought out their partner inside the wireless deal. That's what I think that's going to be from. Yeah, because the next numbers per quarter are going to go from 41.2 billion, 44 billion. The next year they're expecting 41, 41, 42, and 45. You know. And if you do take a look at this, what is intriguing here on this one, it doesn't mean that it won't retest it. But what it did do on a monthly basis, you take a look at Ma Bell, and on a monthly basis, what we did, you came down with big volume, 731 million last month. You got to 30.97. That was going into the low that was generated in 08, which is 29.37. And, you did 1 billion shares there versus 731 million. So that's not a bad. What does happen with that is that, I can get tested, but you're still 300 million light than the test. That's a successful test. That's the first part. The second part, now watch this. This is pretty cool. If I pull this back and we put this only on a 5-year so you can see it clearer, what it also was doing is that when that went up the prior month, it was pushing a swing higher with volume. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership and fly with it. Thanks for being here, folks. Have a great night, safe night. Look for a speaking right here tomorrow. Wow! Go get them, folks.